Good morning, guys, and welcome to the show. Today is Wednesday, October 24th, 2018, and let's talk about Italy. First, let's open the charts right here. Now, what we're going to do is we're going to take a look at Italy and what's going on in Italy. The question is, a lot of people are going to ask is, could this actually bring down the European Union? And the answer to that is emphatically yes, it could, but, it's a big but. Italy is too big to fail, so it could easily bring down the European Union. But the thing is these guys in the EU are going to wrangle over the government with the government of Italy. Wrangle means fight with them over what's happening for months. It's going to go back and forth for months. So this is on the back burner, Italy is. It's like simmering on the back burner. It's not really going much of anywhere because they're going to wrangle over it now. They're going to fight over it. They're going to do what they're doing right here, where one of the members of the government of Italy is lifted his shoe over his head and he's pounding on the papers that come from the European Parliament. I'm going to tell you what, while they're wrangling over this and figuring out, it's going to create quite a little bit of sensationalism, and it's going to create quite a bit of nerves within the world, within the financial markets. It's going to start to create more and more waves in the financial markets, more and more volatility in the financial markets, but it's going to take too long because other things are going to come in quicker than Italy and take down the financial markets and take down the financial system while they're still wrangling over this thing. If it takes long enough, Italy finally would get around to taking down the world's financial system 6 months or a year from now, if everything else will hold off. But everything else is not going to hold off. And so that's what's going to happen with this. So let's get right into the markets now and take a quick look. First off, let's see. We're going to take a look at silver today. Now, silver is actually today not doing too bad, even though it's at $14.71. That's pretty good, really. It's done pretty good in the last day or so because considering that the dollar's going up. Let's take a look at the U.S. dollar index. We've got a climb in the 96 point. Maybe I got my camera. I got to kind of peek to see my own charts. 96.27 on the U.S. dollar index right now. That's gone up quite a little bit, and so silver's doing okay considering the dollar did touch 96.5. It's simmered back down a little bit, 96.27, but on the day, it's up on the day, and silver is maintaining its price. When they get nervous, they run to the dollar. Money's searching for a home right now, by the way. It's an awful lot of nervous money out there, and that's why it's also moving into the bond markets. Let's take a look at bond prices today. Let me see, where are they? Right here. What we see today in the bonds is we see that bonds are going up in price today. That means yields are falling. We got falling yields in the bonds. An awful lot of money's moving into the bonds. We're up over 4 basis points in the U.S. 5-year. We're up. That because yields have fell over 4.3 basis points on the U.S. 5-year. So bonds, the yields are falling today, which means money is pouring into bonds. People are buying bonds today. Big time. Money's pouring into bonds. That's because money's frightened and it's looking for a safe haven asset. Institutional money is not going to pour into the precious metal space because so much. It's hard for the institutional investor to actually buy physical precious metals, and the reason why is these guys pour so much money at once. How do they take delivery? How do they qualify that asset? That's hard for them. It's easy to qualify the assets when they're buying U.S. Treasuries. or any paper assets. But when you're talking about a physical product that has to be delivered, it's hard to actually qualify it. And that's the problem with physical. Now, they can buy the derivatives, but see, we're talking about massive amounts of money, and massive amounts of money right now is scared. It's moving into the dollar pretty good. The flow into the dollar today is really good, not only in the treasuries, but also in the dollar index. See, we've had that up in the price of the dollar. So nervous money is heading for safe haven asset right now. That's where it's heading. And that's why the silver price is holding up, even though the dollar's going up. Normally, the pressure of the dollar going up would drop the price of silver. It's not. Not today. Take a look again here. Where we see it staying very stable, and it had a move upwards. You see on the red line there. That was yesterday. It had a nice little move upwards, and it's maintaining it against the dollar rising as well. So it's just like I said, the asset classes that the money's going to move to when the real fear comes is going to be dollar, gold, silver. And it could be cryptocurrencies too. It could be, because institutional money can move into the cryptocurrency space. It can. Because they can qualify that asset rather easily. And you can move over the internet. You can move vast amounts. Better than you can qualify real physical gold or silver, which you have to take physical delivery. With a cryptocurrency asset, you can take instantaneous delivery anywhere on Earth over the internet, almost instantaneously, within a fraction of a second. How long it takes to push a button to send the cryptocurrency from one place to another. So cryptocurrency could be an asset class that they move into if they really get frightened as well. It depends on how well it's moved up, its track record. If it's went down and it's been in a bear market for a long time and nobody wants it, then they're going to be a little bit frightened of it. But if it's in a hot bull market at the time, it's all about the timing. If it's in a hot bull market at the same time that the world's collapsing, well, the fear could actually move more people into it, a lot more institutional investors and everything, and so it could really get on a roll. So what is that doing today? What's the cryptocurrency doing? Well, we're seeing a very stable-looking market. It hasn't moved much up or down. It's at 64.34, and it's going along rather flat. That's what it's doing today on the cryptocurrency. It's up a little bit from yesterday. It was running 6,400 yesterday, and today it's 64.34. So it's gained like 34 bucks overnight. That's better than nothing. Let's take a look at the market capitalizations on the cryptocurrency real quick. $210 billion, and Bitcoin dominance at 53.5%. And all of the coins here, they're all a little bit in the green. So we've seen a little bit of movement in all of the coins up today. Okay, what all we covered? We've covered the dollar, we've covered U.S. bonds and rates, cryptocurrency market capitalizations. We haven't covered oil yet. Oil is up a little bit today, 88 cents, 1.32%. Let's take a look at the Dow Jones itself. It's down 70 points. Now, 5 minutes ago, it was even with the board. In fact, it was plus a little bit. So we see the volatility in the stock market. They're getting frightened of it. Investors are starting to get a little bit nervous about it. They're like, should I go into it? They're hearing the bulls say, hey, go into it. We're going up to 100,000. And they're hearing the bears say a crash is coming. And they're like undecided. And they're like, don't know. Their eyes are shifting back and forth. They don't know. Should we get into this thing? Or should we pull the plug? And so the market is hit an inflection point right now. It's overpriced. It's oversold. It's at an inflection point. You know, and its upside potential, I don't see it as being near what its downside risk represents. Listen, thank you guys for listening to this morning's report. And let's see, we got tomorrow morning, we'll be back for another report. On these videos, I need to make them 10 minutes. So we're at 9 minutes and 49 seconds. I'm stalling for a couple seconds. 9 minutes and 55. Okay, here we go. See you guys tomorrow, and bye-bye for now, guys.